It's April 27, and it's been a hot minute since I posted a video or an update on the account. As you might have guessed, I've been very busy. I didn't drop out and I didn't die or anything like that. But if you are following the channel, sorry that I've actually taken a few weeks, maybe even a month since the last video. But alas, here I am, and I'm going to show you the account, run through all the positions, and really update you on some of my thoughts about what's been going on. Surprisingly, even though have been very heavily in the Chinese stocks and they've been getting murdered, surprisingly, I'm actually not as far down as one might think. I thought that I would have my account in half, but it's not quite that bad. So without any further ado, here's the account. I'm sitting at 170,000 right now. Had a decent day today, so that helps a little bit. I'm going to run through the positions on the right side so you can see, starting with the options and then all the way down to the equities. When you look at the options, all the information you'll ever need about the position is right here. And then on the right side, you'll see the daily change in percentage and in numeral value. You can pause the video at any moment to try to figure out the exact positions that I hold. I'm just going to scroll through it quickly. It's quite a ton of them. I've sold a lot of contracts. In fact, I've estimated that just in this a week, I have about $2,200 worth of premium that I could be collecting. So it's quite substantial. In fact, I've really leaned on that strategy of trying to collect premium. And so far, I've been making money from it. But as you can see, the account is down just because of the positions that I'm holding. And a lot of those leaps that I bought on, Alibaba, JD, even PayPal are down. And I've been trying to collect premium on Goldman Sachs. And that's been working great, except Goldman Sachs is down. So I'm taking a hit on that as well. Anyway, here are the equity positions. Apple is my largest one. I'll show you the account tab in a second so you can see which of the positions is the largest. Now, I'm really not holding DD. It's only 5 shares because I'm interested in what happens when they delist from the American exchange. I want to see the mechanics of what happens to those shares. Are they converted to cash? At what price? Are they converted to OTC, over-the-counter shares? So that's why I'm keeping it in the account, just to find out. And then the PayPal shares I was forced to buy due to an options event. And the Smith & Wesson shares that I bought also through options event. And I've actually have 1,200 shares of that. It's quite a bit of money. However, I have sold calls against all of them, so I'll be getting rid of the entire position soon. As you can see here, I've already returned $300, but I'm down much more than that on the actual share value, almost $2,000. So it's a small victory in the grand scheme of things. So anyways, every single one of my stocks is contributing to this downfall, including Apple. Apple has actually been down a bit from its highs. Let's see, in the last 3 months, I think it peaked out at like 182 or something like that. Over here, 182 on January 3rd. And then it scored a lower high on March 29th. So it hasn't been great, but to be fair, Apple's actually been holding very strong relative to the rest of the tech stocks in the US. Stocks like PayPal gotten killed. Of course, they got some of those. Facebook, they had a good earnings today, or good relatively speaking. But they've been getting murdered too. And virtually any tech stock you can think of has been getting killed. I mean, Well, that's Netflix, right? Netflix lost some subscribers, so they're in the gutter. Um, I think Google was struggling as well with its advertising revenue. Let me see what the Google chart looks like. That's the wrong shares, but it's okay. Yeah, I mean, Google peaked out at around 3,000, and now it's at 2,300. Long-term chart looks good though, huh? Let me see Amazon. Amazon is down 20%. So it peaked out at 3,700. Now it's 2,800. So it's quite a substantial fall. Facebook was pretty bad. Pretty bad drop here. I mean, like 40% off the highs or something like that. It peaked out at 400. Now it's 200. So like 50% drop, pretty much. Anything you can think of, really. Just been getting murdered. What's another one? Microsoft, I think, is holding all right. They actually had pretty good earnings. So you can see it reflected in the price here. It popped 5% today. Let's see the year chart. 3-month chart, only 5%. Yeah, I mean, look, not too bad. 342 to 285. Microsoft's been holding okay. Apple's actually, I think, been the strongest one, even though they're running into supply issues from their producers in China and whatnot. So I can't complain too much. It's been holding all right. But I have lost a ton of money on the Chinese stocks. That's for sure. Okay, next. The account tab. So let's see. Investing tab. Let me see if you can see it properly. There it is. So I'm holding a lot of leverage at the moment. Usually when the markets go down, I tend to hold more margin because I'm trying to buy when the price is low and delever when the price is high. I was able to deleverage all the way up until like 4% margin or something like that before this drop started happening, this recent Chinese drop. I delevered when we had that 40% rally on Alibaba. I managed to sell some, and I think because of that rally, my account isn't looking in shambles right now because I was able to take a little bit of money off the table. I reached the prior peak of 200,000 on the account, and actually I have not crossed that line yet again. So that's my record high right now, is 200,000. But anyway, this is probably some of the most, intense amount that I've been managing. I think I was over 300,000 a couple times, but it's pretty close. And I have sold some puts, and if those puts trigger as well, I mean, I'm going to be up above 300,000 in no time. Let's take a look at these positions. Sorting them by total return is just my long-term positions really that are going to be on here. Everything else is red. All the short-term positions. VIP shops by a long shot is down $7,000 almost. Not to mention I have a few leaps. I have collected some money in premium, that's true. And I have traded some of the position for profit, but it's nowhere near the $7,000 mark. Maybe 1,000. This is sorted by equity. Currently, Apple is my largest holding. It's my core position. Goldman Sachs is second largest at the moment. JD, VIP Shop, Realty Income. Realty Income is my second core position. I consider core right now Apple, Realty Income, and Main Street Capital. Everything else I'm willing to sell at a moment's notice, depending on circumstance, if you're interested. If you want to look at the chart of the account, that's fine. This is the 1 week performance, minus 4.26%. 1 month performance, minus 10.3. 3-month performance is pretty much flat. I'm up over a little bit over percent. And 1 year, I'm about flat. which is kind of sad. I wonder if the S&P is flat in the year. Let me see. I like to compare myself to the S&P 500. Yeah. So there we go. I'm about even with the S&P 500 on the year chart. I think they're beating me though a little bit on the month. Yeah, just on the last month. But anyways, I'm pretty confident. Oh, I shouldn't say that, but I hope that I will beat the S&P 500 this year. I actually failed to beat him last year. So that was a big disappointment. So it kind of started the year off on a little bit of a disappointing note, because I beat the S&P 500 in 2018, 2019, 2018, 2019, 2020, and then in 2021 I actually failed to beat the S&P 500. So it was a bit of a negative experience for me. But I managed to pick myself up and keep trying and just trust that whatever I've discovered about the markets and learned about the markets and my strategy will persevere in the long run, and I'll be able to beat the market more consistently in the future. Now, you might be thinking 3 out of 4 years is good. It's still not bad, especially since my 2021 was not a losing year. But I mean, I have high standards for myself, and I hope that I can meet them. And so it's a bit disappointing. I really wanted to clock that, fourth year, but actually third year on camera. I wanted to clock it in the records that I can beat the market 3 years in a row, but it just didn't happen. Okay, so what's going on here? What's my thinking about the markets and on China? Well, I've been reading a lot about what's going on in China, but it's just so hard not having any first-hand experience. I'm not on there on the ground. There's all kinds of crazy things happening from a third-person perspective, right? Like, if you're in there, you probably don't think those things are crazy, but like all the lockdowns, I mean, it's year 2, and they have that zero virus policy, and I mean, the government's there trying to control, 1.5 billion people, basically. And how do you lock up like a sixth of the world, a sixth of the population of the world, in their little boxes, apartments? I mean, it's rough. I get it that they're trying to slow things down, but the world economy is definitely taking a big hit, especially since China is the biggest manufacturer out there. And when people are locked in the U.S., yes, we here in the U.S. have a lot of production and are very important globally, but most of us are servers and hairstylists. Like, what kind of global impact does that have? Like, yeah, all right, you're not gonna get to get your food delivered, and you may have a bad haircut for a while, but we're fairly insignificant, right, when it comes to world economic activities. Whereas China is actually, they're producing things. They are, importing and exporting raw materials and things that we actually need to function, like things that, we need to, we need in our houses in order to live. And so machinery of all sorts that produces other machinery, like, Anyway, I don't know if I'm probably rambling a little bit too much, but so my opinion is that it just seems a little bit crazy from a third person perspective what's going on over there, and how strict and stringent their rules are about this disease. And I hope that things loosen up, just like in the US. I heard that Mr. Fauci declared that the pandemic phase of the virus has ended in the United States, but it still remains a risk globally. So that was kind of interesting. I don't know what kind of medical definitions they're using for that, but thought I'd share that piece of news that I heard. And anyway, that's kind of encouraging, but at the same time, like, it's hard to be positive. You know, we're still now starting to deal with the fallout of this whole thing. You know, then the whole inflation story, and the cost of money is going to be going up. So it's very hard to predict where the markets will go from here. So what I'm trying to do is not so much to predict where things are going and just try to collect premium off the top without trying to guess the prices too much. Just pick a company that I like, collect premium, and not worry so much about the macro stuff. I mean, yeah, I gotta take them into consideration, the micro and the macro, because why would you ever leave yourself with a piece of information that could help you make a better decision? So I personally want to stay as informed as I can about everything, but and at the same time not try to pick a direction. But I mean, it's kind of hypocritical like talking about this, because I have picked directions, and if you look at the account, it's full of leaps. I mean, I've bought so many leaps in Alibaba. I think I made another video of the 4 different ways, like my method of trading and investing. But I have a lot of leaps. I mean, look, I just have like 4 Alibaba leaps here. 140 calls that expire in 2024. So I paid through the nose for those, that's for sure. $4,000 market value right now. I'm down $5,000 just on this position. So it's very painful. I mean, I've lost a ton of money on the Chinese stuff so far. But if we look at Alibaba, right, and just if you look at Hang Seng index or anything, like look at this year chart. It's amazing how much value it's lost. And I probably started somewhere around here. Like, this is not even the peak, 236. Peak was like 319. It doesn't show it here. It says 309, but it was 319. And now it's below 100. Like, it's insane. I started somewhere around here in 2000, like when it was 200 and maybe 10. Something like that. I started messing around Alibaba. Now it's at 89. If I just straight up bought Alibaba, like, and stayed in it, I'd be down a ton of money. And I kind of am. I've lost a lot. I've made up for the loss of money in other ways, right? Oh man, it's just exhausting to think about. Okay, so I'm dragging this video on too long. Let me know what you guys are invested in at the moment. What you think is hot. Are you picking up trades from the recent volatility? Are you trying to pick up beaten up growth in tech stocks? Are you shorting the big tech stocks, thinking that the last generals fall last? I mean, the big generals fall last, right? In a bear market? Or are you like hardcore value or resource stocks? Like, what do you guys think the markets are going from here? Or are you just sitting in cash in this inflationary environment? Like, I don't know. What's your strategy? I'm just really interested in knowing what you guys are doing. All right, I'm going to end it right there. Let me know. Peace out.